Hey, morning, everyone. How's everyone doing today? It's I don't know where to put this thing. Let me make this smaller, I guess. Oh, let's put myself down in the corner here. This seems fine, maybe. Morning. Let me know if you guys can hear me. Happy Monday. It is November 27th, right? This week we're actually going to enter into December. It's going to be December 1st on Friday, and we're wrapping up a short week from last week. Markets were closed on Thursday, and Friday was a half day where things pretty much didn't really move. It is Cyber Monday, right? Black Friday just got done and over with. So Cyber Monday is what is cooking next. Let me see. So Cyber Monday, right? Some of the Black Friday, we'll talk about the numbers that actually came out because this is good for consumer sentiment figures and whatnot. But Cyber Monday, before we jump right into this, remember we still have our deal going on at TRADEPRO Academy. If you go check that out on our website, the first month at TRADEPRO Academy features a live trading room with our Discord and options as well. It is $49 for the month. So go check that out. We did some lives last week on YouTube, and what you're going to get with this is the access to our new psychology course that's going to be filmed live in front of you next week. Wow, where does the time go? So Black Friday, right? Online shopping sprees in the US have been a bright spot for retailers, with consumers spending a record $9.8 billion according to Adobe Analytics. And the record spending, which was widely expected, was driven by shoppers hunting for the best deals online amid a deep discount and flexible payment options kind of sphere. So Thanksgiving online shopping sprees also rose to a record $5.6 billion, and consumers aren't done yet, right? Because Cyber Monday is expected to be this year's biggest online shopping day. MasterCard data also shows that online sales surged while in-store shopping was less popular. So today, and our deal at TRADEPRO Academy runs until the end of this week, but today is Cyber Monday. Things like charting platforms like TradingView, for example, have a very, very deep discount, which I actually got into today. So the market is in a very interesting place. We'll talk about that. We've got our charts here on the screen that represent volume profiles on the S&P 500, but a lot of people are looking at the current market conditions as an area of unsustainable upside, if you will, talking about very, very cheap volatility. So talking about very cheap volatility coming back into the markets is a widely expected consensus, as everyone looks for not only the markets to pull back on the S&P 500, but for them to actually crash to the downside. Now, I'll give you my opinion based on this, because I do think that volatility and the VIX are multi-year lows are fairly cheap. And a lot of people are buying puts, right? Puts are very cheap as well. So the increase in put buying over the last few days here comes from a very low price in puts, right, due to low volatility, with the expectation that these are hedges and people are looking to kind of prevent larger downside drops in portfolios by hedging the opportunity with these cheaper puts. Now, the way I see it is that I think we are in a topping region where volatility is really cheap, but I think that people are getting a little ahead of themselves, talking about a very large crash and very seismic downside moves. I think that these pullbacks come from areas that are slightly higher than we're currently trading right now in the S&P and in other markets. NVIDIA reported earnings last week, the semis, and that pulled down over the last few days, which is causing some kind of downside pressure in this market. But the way I see it is that we're coming into an area where, yes, okay, we're topping out, but I think that people are getting a little ahead of themselves, suggesting that we do get a little pop for those early shorts before we open up the downside. So when we talk about the S&P 500 futures, right, I think there's going to be a good opportunity for that downside on the swing perspective, not only in tech, but in the SPY as well. and maybe some longs on volatility in the coming few days. The way I like to see it is a pop and drop in the markets this week leading into the mid of December. So I could see prices either stagnating at the 45.70s, mid 70s on the S&P, but I would much rather see them go 45.90s, right, mid 90s before we get that larger sell. So we'll talk about what we look for in today's session, right? There's a key area that sits in and around this low 50, right? Buyers are going to want to hold that out and sellers are going to want to hold out that mid 70. So any acceptance back below that mid 50, we can look for the downside, but realistically, you can see this distribution block that was created by a lot of volume over the past multiple months. And the acceptance under 45.40, right, and an open under there, right, a close under there, suggests that we can look for that downside with a higher degree of probability, where we would look to repair the auction of this low volume that sits all the way that could take us into 44.30, 44.20 before some expected buyers step in. There's a lot of volume into this mid, or I should say a higher 4,300 area, which I do like. I would say that if we look at the weekly chart here, there's a lot of poor auction to be filled. That could take us down to 44.20, as we were talking about before, major support, and then down into this 43.60 is huge, but 43.20s, I think that's the ultimate support before we start seeing some of that upside momentum. You can see a lot of volume built up here, so I think it's going to be very difficult for price to break through 43.60, which suggests that we have a 200-point move to the downside coming into the next few weeks. And I think that we don't get that far, but I think that we're looking for a 100-plus point drop in the markets over the next 2 weeks after we, I think, explore a little more of that upside, a healthful pullback before we start running continuously into Q1 of 2024. Now, I'll talk about the opportunity, the next huge market opportunity that I could see in the overall market after we take a little breakdown of the UN climate talks, right? The latest round, known as COP28, gets underway this week in Dubai, with many of the parties for concrete pledges to combat the damaging effects of climate change. So it's a trend that has been since the 2015 Paris Agreement to curb warming at 1.5 degrees Celsius above pre-industrial levels, where progress is yet to be made despite many workshops, gatherings, and conferences. Greenhouse gases like carbon dioxide, methane, and nitrous oxide even reached a new record high in 2022, while increasing temperatures, a loss of biodiversity, and extreme weather events like floods and hurricanes have set off many environmental alarm bells. So many scientists now say that 2023 is virtually certain to be the hottest year ever recorded in history. It doesn't help that the regional wars are sparking fears about energy security at the same time that fossil fuel manufacturing usage is being outsourced to developing nations, where deregulation and environmental protection has been used to advance their economies. This can even be seen amongst countries that are powering the green revolution, like nickel smelting for EV batteries, with further criticism being leveled at the sustainable commitments of some of the world's most profitable companies. So a backlash against Dr. Sultan Al-Jaber erupted as soon as the head of ADNOC, the state-owned oil company in the United Arab Emirates, was appointed president of the COP28. The climate talks this year are also taking place in the UAE, a hydrocarbon heavyweight within OPEC that plans to raise its oil production capacity to 5 million barrels per day by 2027. And others argue that this is the type of leadership needed to persuade the type of agenda and can help the fossil fuel leaders enter into a climate conversation to transition the globe to a low carbon economy. The UAE maintains strategic ties ranging from the US and the European Union to China and Russia. So it's going to be pretty interesting to see. There's the OPEC meeting that takes place this week as well. The way I see it is that this kind of comes into consolidation with that next larger market opportunity. Last time we talked about this, we got a bit of flack here on YouTube, but we had a very good profitable move. And I'm looking at commodities mainly. I'm looking at commodities into 2025 as the next cyclical opportunity. Gold has already risen quite well, quite effectively. But other things that I'm looking at, for this next opportunity stand in the way of oil. I'm looking at copper, nickel, what else? Steel, silver. I think that commodities and metals over the next few years have a very good opportunity to gain traction, a lot of traction to the upside in this cyclical change. So that's one of the main focuses I'll be looking at in the coming weeks as well, over the next few months even, to start allocating positioning into things like that. So when I look at this, when I look at the market for this weekend for today, we have two main areas to watch for: the low 50s, the 45, 52, 53 area, and the 45, 70, 73 area. That's where price is kind of pinned right now. The escape of either area allows for the continuation of the immediate move. And I don't necessarily have a bias going into this. We had a very short week last week. Right now, we're coming into a full week. It's Monday trading day, November 27th. So I would like to see the bulls try to continue this a little higher before the sellers step in. But these last bull moves have created a lot of auctions to repair to the downside, a lot of naked volume points of control as well to be repaired. So these are things that prices will want to come into and complete before gaining traction a little more to the upside. So keeping that in mind, let's open up our live trading room. Don't forget, you can go and check our website out for that $49 for the first month at TRADEPRO Academy with our live trading room, which is what we're going to be doing right now. So keep that in mind as we enter this week, looking for more opportunity. First full week since last week, right? And let's do it, right? This week, we don't have crazy news coming out. We're pushing the non-farm payrolls until the following Friday. I think because there was a holiday week the week prior. So let's keep an eye out on